Inflation eats away at consumers' purchasing power, and recession forces families to cut back on discretionary spending. And that's not a good recipe for the world's largest footwear brand. But that hasn't stopped financial pros from making Nike the most searched athletic footwear and apparel stock over the last month on Trackstar, despite the fact that nearly every analyst slapped a sell rating on the company. And with shares down 47% year to date, it's time to take another look at the company that created the Air Jordan. Now, in case you don't know, Nike is the world's leading designer, marketer, and distributor of authentic athletic footwear, apparel, equipment, and accessories for a wide range of sports and fitness activities. Nike has experienced modest revenue growth over the past 5 years, rising by 35% and going from $34.3 billion to $46.7 billion. But the firm is on pace to have its best year ever, as its 12-month trailing revenues are currently sat at $47.1 billion. The company does have strong financials, with $11.8 billion in total cash and $12.5 billion in total debt. Plus, it pays investors an annual dividend of $1.22 per share. Nike's PE gap ratio of 24.6x is notably lower than its 5-year average of 47.6x. And with shares down so much, its PE ratio is still higher than the majority of its peers. And with a gross profit margin of 45.3%, Nike is the lowest amongst its competitors. However, it's worth noting that Nike is more than 3 times the size of its closest competitor, Lulu. Nike does have a better net income margin than Adidas and Under Armour at 11.96%. But again, Lulu performs better with a net income margin of 15.6%, and Nike's EBITDA margin of 15% does not come close to Lulu's 25.1%, but it does beat out Adidas at 9.9%. Nike is right up there with Lulu when it comes to comparing return on equity, and it generates far more cash from its operations than the rest. But Nike has struggled to grow its revenues at 2% year over year, whereas Lulu is at 27.8%. Even worse, its EBITDA growth is negative 15% and nowhere close to Lulu's 28.5%. In our opinion, this is a 2 out of 10 ranking stock. For years, Nike was able to lean on celebrity endorsements like Michael Jordan, Tiger Woods, Kobe Bryant, LeBron James, and Cristiano Ronaldo. But many of these star athletes are past their prime and approaching retirement. Today's youth has also started to embrace luxury footwear brands. Moreover, with all the signs of the economy weakening, Nike has excess inventory in the US that it needs to unload. It's a tough time for Nike and its shareholders. While it remains a great American brand, you don't have to rush in and buy the stock now, as the company faces many challenges ahead. And more importantly, Lulu just looks better across the board.